Good evening and welcome to Your Money, Your Call. I'm Chris KImber. Joining me on the show tonight are Kim Slater from County Securities and Roger Montgomery from rogermontgomery.com.
Roger, do you use stop losses?
I have a career built on trading systems. I used to build automated trading systems, which back then we called clickers, now they're called trading robots.
Right.
And at one point I was the biggest trader in the Hang Seng and Nikkei futures contract in the world.
Yeah.
I've never found a stop loss method that worked consistently. You know, so if you're, look, and no offence to Kim at all, a stockbroker, and there was one who wrote in the paper on the weekend about the importance of stop losses, would naturally advocate the use of a stop loss because
create a few more trades.
Exactly. But and
Kim's
in the
not a
past, no, well, in the past I've used them, and they're great because they keep you out of collapses. By definition, they're going to do that. They're going to get you out at a 5% loss, or you're going to use a volatility-based stop loss, and they're going to get you out.
Yeah.
I've never found one that predicted correctly when the collapse was going to be big, and separate that from the one that was going to be small and would ultimately reverse. And for that reason, I don't use them. And a lot of research that we did, we built trading systems that worked really well. They made a lot of money. And when we tweaked some of the parameters, they made even more. But then when we stood back and we compared it to a buy and hold strategy, we found that a buy and hold strategy outperformed because there was less commission being paid out. So if someone can tell me the method that they've got for a stop loss that works consistently across all markets and across all volatility in all cycles, you know, I'd be delighted to hear it, but I've yet to find one.
All right. Yep. No, I think that sounds about right. Nick from Altona. Thanks for waiting on. What's your question for us?
Yes, my question's to Roger. Please, in regards to Vocus Communications. Share price take a little bit of a downside. I just wonder if Roger has heard any news about them, or whether his expectations of them are a little bit excessive in the first place.
Yep. Thanks very much for your question. Vocus.
Yeah, look, Nick. Was it Nick? I think it was Nick.
I think it was, yes. Yep.
Nick, I appreciate the tentativeness with which you approach the idea that the stock's taken a bit of a downside. Let's not mince words. It's gone down a lot, like everything else in the market at the moment. This is a business run by James Spenceley, people like Stephen Baxter. This is a brilliant management team for this space. They know what they're doing. They sold pipe networks for a massive premium, and I suspect that this is deja vu for them. They're building the business again, and ultimately it wouldn't surprise me if they've already identified a potential buyer for this particular business. Having said that, your question was, has there been any news recently? In IT News, there's a website you can go to called IT News. If you look at IT News, you'll find a story in there back on the 28th of this month, 28th of September rather. They suggested that they've got some fear that Telstra might squeeze them out of some of the ducts where space is tight, because the NBN Co rather spent $4 billion on a duct lease, and if space gets tight in those ducts, it could mean that other lessees of that duct space, Vocus being one of them, might be squeezed out. So they've raised that as a concern. Has that translated to declining prices? I don't know whether it's because of that or because the market generally has been going down. But this is a great quality business with bright prospects, great management. We own it. You know, the cheaper it gets, the more excited we are.
Bernie, thanks for waiting on for us from San Remo. How can we help you?
Good evening. Tonight I'm interested in Lend Lease. I'm thinking about whether I should get into it, and I'm interested in the panel's view on the company, and in particular Roger's rating and IV for it.
Yeah, listen, thanks very much for your question, Bernie. Yeah, look, Lend Lease hasn't been on my radar for quite some time. Roger, is it getting cheap enough yet?
It's getting close.
Yep.
Unfortunately, it's a C3, so it's not investment grade for me, and despite the fact that it's a classic blue chip company from the perspective of most conventional investors, for me it's you know, it's just not quality enough.
Yep.
There's other companies that I'd buy before this one, many of them. Having said that, it is, you know, if you've got a gun to your head and you're forced to buy it, what would be the level at which you would buy it? Well, I've got an intrinsic value of $6.22. If you assume you want to pay 10 to 20% discount to that, well, you want to be buying it at $5.60 or thereabouts, $5.70, and it's trading at $6.89, so or $6.90. So you need a little bit more weakness before you'd be interested.
Melbourne, thanks for your call. What's your question for us?
Hello, how you going? I hope the panel is doing well tonight. Just wanted to ask a question to Roger.
Yep.
MCE you've talked about a fair bit in the past. Just wondering if you had an update.
Yep, thanks very much for your question. I must say I think MC's on our radar now. I think down in the low threes today is looking pretty cheap.
Yeah, look, it's cheap. It's very simple. It's cheap if the company is able to actually make an announcement of an order.
Yeah. Tends to help that.
Yeah. I mean, at the full year results, they announced that they had $110 million on their book. They said that they expected to get 20% revenue growth on top of the previous year, which means that they have to announce within the next 2 weeks, really, they have to announce $114 million of orders in order to actually maintain their forecast of 20% revenue growth. I'm a little bit sceptical, and the reason I'm sceptical is because the order process from booking to banking can take 8 months or longer if the company pays you once you've delivered on the order. So we're now in October. There's not a lot of time left to the end of the financial year for the company to actually meet its full year forecast. Now, what's it worth if it hits that forecast? Probably about $5.20, $5.30, maybe $5.60. But if they don't hit that target, they're worth considerably less, unless you believe the orders are going to come through down the track. I think their prospects are bright, very long term, but you know, I want to know what the thing is worth now. And if they don't get orders, and they're laying off staff at the moment. That's the latest update. They're laying off staff. I want to know, you know, why
are they doing that? They're not expecting the orders.
A year ago, they left the market and analysts like me with the distinct impression that not only would they ramp up their Henderson production facility, but they would maintain their Malaga plant production at full capacity. I mean, they kind of intimated on some of the site tours that both could potentially be running at full capacity. Now, what's happened is they've gone into the new plant. They're closing down the old plant faster than market analysts expected, and they haven't got new orders with the new plant. So I think there's, look, and I'll say this without any reservation, you know, I think that the company has been very good at announcing positive developments, but very bad when developments aren't going positively.
Yeah.